The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. Okay, folks, what a wild day in the history of March 11th. So we'll see, or March 10th. We'll see what happened. Mean that we have a 350 point swing up and down, 400 point swing up and down in the stock indices. But the real wild one, of course, was the gold and the silver and the euro. Those were the ones that were, I think, the wildest. And it was really amazing, folks. Just give me a tiny bit of technical advice here. When you put a stop in, don't put it in exactly at the old low. Like at that euro down there, the old low was 108.31 and the low was 108.22. Give it a little bit of room. Give it a few $100s, because that's typical for those stops to get hit. I mean, they're not out there looking for them or anything like that, but when they're hit, there's just nothing there. And then that's what causes the market to explode to the upside. We were on the air when that was happening. I didn't even see it. I saw the downdraft in the stocks and I saw the up move in the silver and the gold, but I didn't even see what was happening to the euro till after we were off the show. So just remember, that's what's happening now. We had that 300 and some point move to the upside. Watch for a 38% pullback in the euro. That would take you down to 110.70, and we got down to 110.83 so far. So keep an eye on that 110.70 to see that. Now, if it goes below it, then could go lower. Maybe this is just an aberration. Who knows? We've seen these before. I mean, you saw what happened back when the Fed raised interest rates the first time, back in January, and I think it was January, and we had a 500 point move in one day in the euro, and yesterday was about 350. So you do get those big moves. Now we're going to take a look now at the gold market. As you can see, the trend line that has been in place since we ran up in gold just about 3 weeks ago. Every time we backed off, which each back off was between $35 and $40. And then yesterday we hit the exact number again, the 618 of a previous swing and 786 of another swing. I was really hoping it would make the 786 of the other swing. Fortunately, the silver was acting the most bullish yesterday. It really had a nice room. But folks, there's a caution light. Caution light is flashing in the gold market. Not just the fact that Larry Edelson neural network forecast is still in this area, but the flashing light is that open interest dropped yesterday in gold and silver. Not by much, only about 7,500 contracts, but that's very unusual, especially given that type of action. So if it starts dropping again, look out, because gold. If this open interest in gold starts dropping, this market is it's going to be in big trouble. This is what happened to it back when we were trading in 1932. We had that vertical move, and open interest was dropping. And when prices go up and open interest drops, that is short covering. That's the definition of short covering. Good. And so you've got to be really, really careful in here, because once that's finished, the market will fall of its own weight. Now, we've had a request to take a look at platinum, and I bring that chart up here for you for just a second, and we'll take a look at it. Yesterday was a rather sad day in the old Adobe here in Arizona. Mark Douglas's cat, Tigger. It was his little cat that stayed with him all by his side every day and night. He was just 3 o'clock in the morning. They would go out for a walk and everything, and Mark died on September 10th, and Tigger basically gave up September 10th. He just kept deteriorating, and Paula didn't have the courage to put him asleep. So who did she call? The old Grim Reaper. So I had to go up and take the little puppy or the little thing to the vet. I don't have any attachment to animals because I never had an animal when I was a kid, not even a goldfish. And my sister always had a dog, but I've never had a dog, and we didn't have dogs when I was raising the family. And I'm just not an animal person. Mainly because of the horses, I think. I think that's the reason. No, that's not true. Okay, this is platinum. Take a look at this. You'll notice platinum had a run up to a 127, 1618 expansion there. Notice gold has made 2 higher highs since that. And platinum, even with that wild action yesterday, did not close up on the day. There's another flag out here, folks. So just be a little careful here. We've went from 812 up to 1012. We rallied, $200 an ounce in platinum, and we're certainly still in a bear market because we've had these lower tops all along. So we want to just be really careful. Now, gold yesterday, I don't know. I happened to be away from the markets until after the close, but I was watching them after the closing section, and gold went up and took out the old highs at 1283 for a moment. They went up and hit 1287.90 on virtually just a really fast tick and no volume. The whole thing didn't take 2 minutes. It went from 1878 to 1887 and then right back down to 1873. I mean, it broke $15 just very, very quickly. And then it continued to break. We got all the way down to God darn, Larry. We got all the way down to 1263 last night. So the 382 retracement of this move in gold, and that's the one I look at because if it's really bullish, it's not going to get below that. The 382 retracement came in at 1269 in the gold, and that's just about where we're trading now. We're trading around, from what I can see from the old Bloomberg, looks like it's trading right around 1267, 1268. So that's in the ballpark of what we're watching here. So we'll watch this very, very closely. Stocks are really strong. The Dow's up about 150, I guess. The S&P's up about 18. I've been asked to comment about the action in the stock market, and I certainly will do that because that's what we do here at TFNN, and that is to try to make everybody happy, which is really difficult. Now, we did go down, and we dropped to 50 handles, as Tom talked about, and then yesterday we get the 50 handles back. That sets up a potential, folks, for an ABCD structure up here to this 2025 to 2030 level, which is the 78% retracement. I'm not sure what's going to cause it, but our good friend Shane Smolian at wolftrader.net has given me some information that he's also given to us. I look at it each day, but I will take a look at it now for you to show you what this particular indicator is that he's developed that looks very, very interesting because it shows how, we got to take a little break here. Just give me a second and we'll be right back. 877-927-6648.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, we're back, folks, and we're taking a look at the work of Shane Smolian. This is from wolftrader.net. It's his indicator is the Fed juice indicator because he watches how the Fed pumps money into the market. And as you can see that, he's been saying for quite some time, at least to the daily emails that I get, is that the Fed has been, pumping the goose, and certainly look what's going on. We've had a nice rally here, and it continues to keep going on. Now we have the big Astro date that has since passed. That was between the 8th and 9th. We have Norm Winsky had one on the 10th, and where we took out yesterday's high. Last night, whether we're going to close really strong again today, we'll have to wait and see. But we do have that target up there, another 15 points or so higher in the S&P. We could certainly reach that without any trouble at all. I've asked a comment about how I handle the rollover when we switch from the March to the June and the June to the September. What I do is I wait for the weekend after rollover. Rollover is on the 3rd, so I watch Thursday, Friday, and then I roll the contracts over onto, for my charting, I roll those over the weekend, and then I can catch up with everything to make sure I could do it. I could probably do it on Thursday night, but I've been doing it that way for a very, very long time. By the way, the S&P started trading on April the 16th of 1982. I happened to be down on the floor at that time. And we are going to have a very special guest. In fact, we have two special guests coming up. On Tuesday, we're going to have Carolyn Broden, the Fibonacci Queen. She writes for Jim Cramer's Street.com. I think that's what it's called. Yeah, the Street.com. And she's been a guest on his show before, so she's going to be our guest. I met Carolyn 30 years ago when she was just a really young girl. She was one of the clerks that worked for Byron Tucker, who was running the trading desk for Goldman Sachs, along with Marianne Gordon and two other young ladies that were there. And that's how I first met Byron. He came in the middle of a snowstorm in January of 1982 when I first got there. And I was watching him because he had this incredible three-piece suit on, and he was wearing these galoshes because he hadn't been able to change his take him off into the coat room because it was getting ready for the opening and things were getting really busy. And I thought that was quite funny. And so he sent Marianne Gordon into the pit to ask me why I was laughing at him. And I told him, I said I was just laughing at his galoshes is all. And later on, he asked me to come down, and I said hello to him, and he's been my best friend ever since. But anyway, she's going to be on Tuesday, and then the following week we're going to have Steve Grindell on. He's written a book called Risky Business. It's about how to handle risk, and that'll be very, very good. That's become a very, very, very popular, very, very popular thing to to look at. That's really the thing that we try to focus on. My license plates on my car over the past 25 years have always read no risk. And I have a funny story to tell you. I get to change the subject here because I get tired looking at these charts, and I know you guys get bored as hell looking at them too. But when I got this, I bought had a little car, a little sports car. But Jimmy Elder, who's my good buddy in Birmingham, Alabama, he was the second student that I ever had. He's a dermatological pathologist, and he was with me when I bought the car. And I wanted to get Fibonacci, and everything related to Fibonacci and geometry was taken here in Arizona because, we don't have a lot of people in the state, so these numbers go pretty quick. So he says, why don't you use no risk? He said, because you're always talking about how to limit your risk. And I said, okay. So I used no risk. Well, about a year later, he's out visiting me, and we're getting gas at a gas station, and I'm filling up, and the car was rather cute, and this young teeny bopper from the university was there filling up her little Volkswagen. She said, no risk. She says, what is it that you do? And I said, well, I teach the pilots out at Davis-Monthan Air Force Base how to eject from the F-16s. She says, wow. She says, what an incredible job. She says, would you like to go out for a drink sometime? And I didn't know what to say, and I just laughed. And Jim said, how in the hell did you ever think of that? And I said, what am I supposed to do? Tell her I was an insurance man? Well, that's probably what I am, as an insurance man. I'm probably closer to an insurance man than I ever was an F-16 pilot, that's for sure. Those guys they live in a different world. Okay, what were we talking about? Markets, that's what we're talking about. We talked about gold, we talked about stocks. We've had a request to talk about the world's greatest stock, and that is Apple. I'm going to bring it up here to let you folks take a look at it here. And you'll see that Apple, even with the wildness that we had yesterday, didn't do very much at all. It's still flirting with that 382 retracement from the high we made back in the 125 level. Came in at 104 and change. We got to 104.34. The number was 104.39. That's the 382. That whole move from November down. But remember now, the rest of the market has rallied back to 61% in the S&P and also in the Dow Jones. They've rallied back. Now the New York Stock Exchange Index is still going to be in the area of the 61% retracement. All that will change if we're up about 300 points in the Dow today, because that would tell us that they're going to get more information from people that tell you this is a big breakout. And I frankly don't think that this is going to be a big breakout. If you remember the charts that we were furnished by our good friend John Murphy yesterday, you'll see that we are in the extremes of number of stocks above the 50-day moving average. This is another way of looking at overbought and oversold indicators. And as you can see, oversold is when we're down on the bottom, and overbought is when we're on the top. And if you look at that price that we just hit up here, that's a perfect ABCD structure. You can see the ABC structure all through these things when you're watching a chart, because all charts that are active and have a lot of liquidity will show that pattern, because we're watching fear and greed. That's really all we're watching. It's not anything exciting other than that. Now if we take a look at the ones that are the advanced decline line, if you'll see the same thing in the advanced decline line, we've had a tremendous rally in the advanced decline line, as we should, because we had that major bottom down there where we had the big ABCD, and you'll notice that we're doing the same thing with the advanced decline line, and to watch that very, very closely. So I think this is just the last stages of this rally. I don't know if it's going to, of course no one knows what's going to happen next, but I believe that we're close, much closer to making a top than we are at a significant bottom. without my understanding anyway. We'll see what happens, and we'll go from that level. So we'll watch it rather close and see what happens over the weekend, and then of course we will be. Oh, by the way, I will not be here next Thursday. Thursday's going to be my travel date. I'm heading to Asia. We got a caller in. Good. Ron from Clearwater, Florida. What can I help you with, my friend?
Hey, Larry. Long-time listener, first-time caller.
Well, good.
And you're a funny man.
Oh, well, looks aren't everything, my friend. Listen, we got to pay a few bills. Can you stay with us?
Sure.
Please.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and we have Ron from Clearwater on the line asking about platinum. Is that correct, Ron?
Yeah, I took half a position on the PLG, but I didn't quite understand what you were saying on platinum gold and gold this morning. Did you mean to say that platinum was going down or up?
Well, all I know is that platinum did not close higher yesterday with the strong move that we had in the gold and the silver. And also it's been down like 3 or 4 days in a row when gold was going up. So this is telling me that we have some weakness going on. But what I was trying to tell folks, we did make a new high in the gold contract after hours. We ran up to 1287, and of course silver and platinum didn't move at all during that time. But the open interest that I check every day at the Chicago Mercantile Exchange, I watch the open interest because I want to see if there's any big changes. And with the activity that we had yesterday, we had a $50 rally in gold, and yet open interest dropped. And that's not a very good sign, because that means that's short covering, and that means there's no new buying coming in. So we need to watch that very, very closely. I don't particularly like buying stuff that's rallied $200, but it didn't back off very much. You know, the platinum was only down a few days. Long term, you know, I think platinum is probably pretty good, because even if it backed off $100 an ounce, it still should have some pretty good support.
Okay, so we're cautious gold.
Yes, cautious gold and silver and platinum too, because it's you know, one of the precious metals also, because this is you know, we've had a heck of a rally off the bottom, and we'll see, you know, how it ends up. But the main thing is I'm watching this open interest, because the open interest is, you know, that's where your players come from. So you've got to be able to you know, to look to see what's going on, because if you don't have new buying coming in, these markets don't tend to rally very much. So we want to keep an eye on that.
Well, that helps a lot.
I hope so. Call in anytime. We'd be happy to help you.
Thank you, Larry.
You bet. Thanks for calling in, and don't be a stranger.
Okay, take care.
Okay, thank you very much. Okay, the next thing I wanted to talk about was we've talked about the platinum and the gold and the silver. We had the request on Apple. I wanted to give you an idea of what's happening in the utilities market, because we've had one heck of a rally here over the past month. And we've got an interesting pattern here that should be completing here either today or tomorrow. And that is this is a 3 drive to a top pattern, looking at the 4-hour chart on the Dow Utilities. We could get up to the 655 to 660 level, which would be the 1.618 expansion, but we've completed the ABCD pattern. And so it's been a big run here since March the 2nd. So this is another pattern that is completing along with some of the others that we're watching. The New York Stock Exchange Index one is still holding up below the 61% retracement. That might all change tomorrow. Most of this big rally that we had last night, I mean, it started in the last 2 hours of trading on the New York Stock Exchange, because the Dow was down 150, and we were down about 45 or 50 in the NASDAQ, and the market turned around quickly and went up and actually took out the highs of the day, which sort of surprised me, but we'll see what's going on. Okay, we've got one of our good friends from across the pond in Singapore. William, how are you?
Oh, I'm good. Thank you, Mr. Pesavento. Thanks for picking up the call. And for today, I'd like to ask you your views on BIIB, that's Biogen.
That's Biogen? Okay,
Yes,
what I'm going to do is I'm going to get the I hope I'm going to. Don't tell me I've lost my oh dear. William, I'm not going to be able to do that, because I'm not able to get to pull up any charts while I'm on the air. I don't know what the problem is.
Okay.
I'm being blocked out. I will look. What I'm going to try to do at the break is I'll try to reboot. Wait a minute. Something's happening. Something's flashed. Guys, this is really strange, because
Oh, so sorry about that.
No, it's not your. I'm the one that's had the problem. It's not nothing for you to be sorry about. But
Okay.
yeah, I'm having a major problem here. This thing is just is totally shut me out here. So I'm going to have to not worry about it too much, I guess. So we'll see what's going on. But
Okay.
William, I'll tell you what I'll do. Why don't you call in again on Monday? And
Sure,
I will
sure.
have this
Sure.
chart for you. And what I'll do is, even before that, I'll make up a chart for you and
Sure.
send it to you by email. How's that?
No problem. No problem. No
And
problem at all.
please keep calling in. You know, we need your
Sure.
business.
No, I'll be precious it's my pleasure to do that. Thank you very much.
I know.
Mr.
And if
Pesavento.
we get to Singapore, you be sure to take Sarah out for some durian, okay?
Yes, I will. Definitely, I will. Thank you.
Okay,
you.
William, thank you very much.
Okay. Bye-bye.
Nothing, you bet. Nothing like technical problems, and now I've really got a beauty here. Now I can't get anything up. This is just you talk about a disaster waiting to happen. This is it. We've got the stocks opening sharply higher. S&P's up about 20 something. Dow's up 160, and we're moving again really quick. And everybody that buys on the opening like they did yesterday, whether they'll be surprised again or not, I don't know. But we did take those highs out at 210 or 2010 in the S&P, and that could easily set up that 2025 to 2030 level in the S&P. And being on a Friday in an up week, it's going to be pretty hard for the market to reverse. It had a chance to reverse yesterday, but it didn't make it. So what you have to do is to just try to stand aside and wait and see what's going to happen next. I wanted to. I've had a request to take a look at the silver chart that we. Yes, I do use Comcast. I don't know why. I mean, I haven't had this problem before. What's happened just now is it's blocked out everything. But I had a request to talk about that silver that we were talking about yesterday. The support was down there at the 1520 level. That was also a 20-man line that was in there, as you can see from the chart. And we went just 2 cents below that, and immediately really took off. We went all the way up to the 1575 level. We did not get above the 1580 level yet, but that still means we could. Now, the gold did make a new high, and that was only one of the three precious metals that was able to make a new high. So we'll wait and see. If you've got any questions, please call in now, because I don't have any data, and that's not a good thing. We'll see if we can get some things going. I have to rely on stuff that, long-term things that I'm looking at. And one of the major things that I'm watching here is to see, what we're doing, the long-term pattern in the Dow Jones Industrial going back to the 1987 low. This is such a beautiful 1, 2, 3, 4, 5 expanding triangle. Now, there's supposedly a possibility that we could get above the 18,600 level. That's another 1,500 points higher. This would violate this, but I don't think that's going to happen. So we'll have to wait and see. 877-927-6648.
If you're looking to discover a new financial resource and diversify your financial portfolio, consider the new Market Safe Commodity Solutions CD from Everbank. This 5-year U.S. dollar-denominated CD gives you exposure to 8 equally weighted commodities, including WTI crude oil, gold, silver, copper, nickel, soybeans, corn, and sugar, in one powerful CD. With annual pricing caps of 70% per component, you could earn up to 70% upside payment at maturity if the commodities increase in value across annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on this indexed CD. Don't miss out. Take advantage of this financial resource designed to grow with the times. The April 14th funding deadline is quickly approaching, so hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member FDIC.
It's 2016, and TFNN has a brand new programming lineup to kick things off. Starting January 4th, Swim Lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the three hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour, sponsored by Nadex. Up next on TFNN.
Okay, folks, we're back, and we have a caller from sunny Portland, Oregon. Douglas, are you there?
Yes, I'm here.
What can I do for you, my friend?
Well, I love listening to you in the morning, and I also I had a
Thank you very much.
You talked about when the currency market opened is when you were paid attention. You would watch, just get a feel for the day. I don't know if you remember talking about that before.
Sure. I watch that very, very closely. The actual currency markets start in the capital of currencies, which is London, which is around 8 o'clock in the morning. London time is when the dealers come in to start looking at their decks. People don't understand that the foreign exchange is really a real business model, because companies that sell things, Rolls-Royce engines, automobiles, locomotives, airplanes, if they sell it in one currency and take it to delivery in another, that has to be, that has to be offset, and that's what the foreign exchanges are for. There are 13 major banks that report to Forex. That gives you the data. They give you the spreads of what they're looking for, and that's why you're able to get data free usually from Forex, because it's the average of all these 13 banks, and sometimes the spreads can be very, very wide on some of these things. Like on the euro, it might be 2 or 3 pips, but on the pound, it might be as much as 7 or 8 pips. And when it's crazy, it can be even more. So you watch that opening price in London, and that'll give you a pretty good idea of what's going on. Does that answer your question?
Yeah, because I know that the Forex, never closes, or during the week anyway, and
that's correct.
I've been trying to watch the markets, and
well, what I would suggest you do is look at about a 15-minute chart or a 30-minute chart on the currencies. I just posted into Tiger TV one that I was watching last night, and that was the Australian dollar. We had a big sell-off, but it was still in an uptrend. It stopped at major, 786 retracements, and it's already making new highs just now. So it's having a heck of a move to the upside here. So that's what I try to look for, is to find something that's trending up and, buy retracement. If it's trending down, sell a rally. That's primarily what I'm doing. And I'm not trading all day long. I'm only trying to pick out certain things that look really interesting to me.
Nice. Well, I sure enjoy your show, and I've learned.
Thank you very much, Douglas. I appreciate it. Are you new to trading, or this is have you been trading a while? Oh, good. Well, spend some time learning, my friend, before you spend real money, okay?
I will. Thank you, Larry.
You bet, my friend. Thanks for calling in. We've got another caller from Franklin, North Carolina. See you later, Gator. Are you there?
Yeah, Larry, how you doing today?
I am good.
I got a question for you, since you're having trouble with your charts as far as just plain trading. Now,
Sure.
I take it you basically swing trade. You don't day trade.
I don't do. I maybe trade once a day, depending upon how much energy I have
Right.
and what the markets are. If markets are real crazy, like at Fed time or non-farm payrolls, I'm certainly looking at those. The one I'm looking at today for a potential day trade was the crude oil. I'd like to see if April crude can get up to about 39.40. I've got a whole bunch of numbers up in that area, and we've taken out the highs of January. Really didn't go anywhere, so there's not any stops to worry about, I don't think. So that's one of the trades that I'm keeping an eye on for today. But
Okay.
I don't like to sit in front of the machine. It's just a waste of time. It just drives
Right.
you nuts, and I don't like to do that.
Right. Well, as far as for swing trading goes, obviously you look at daily charts and stuff, but I notice it seems like when you put charts up, you put all different time frames, and it's like if you look at too many time frames, you almost can give yourself paralysis. There's just too much
Well,
data.
yeah,
So if you're swing trading, what you look at a daily, and then what time frame do you usually use to trigger the trade?
30-minute. I look at 30-minute. I look at the daily chart, and then I'll go down to a 30-minute to see if the pattern is giving me a better price. I'm trying to get into the best possible price I can, to enter at point D of the
Right.
ABCD move or the 1.27 or 1.618 expansion. That's what I'm looking for. And then sometimes I'll even move down to a 5-minute chart to get even closer and closer. And that's what I try to do, is to get down to those areas. That's what I'm doing in crude oil today. Is I've done some work in crude, and it tells me that April crude should have some pretty strong resistance up around the 39.40 level. That's still 60 pips from where we are, but it's still not it. Now, when we do swing trading, we'll put things on an hourly chart or half-hour chart. We might hold those as long as 2 or 3 weeks, or just 3 or 4 days, or maybe an hour, because if we get stopped out of it, it's history, and we move on to something else.
Correct. I'm just wondering, like, I notice a lot of times you put different time frames up, and I was just wondering if maybe it's the point, like, for instance, if you're looking at a 30-minute chart and you're trying to figure out what the heck's going on, so then you drill down to a smaller time frame to maybe see where those ABCs are within a congestion area, and say the 30-minute or the daily.
Yeah, but it'd be very, very similar to a scientist that was looking at a cell. He looks at the cell with one magnification of the scope, and then he goes down to a higher one, and a higher one he gets closer to see what's going on. And that's all I'm trying to do, is just to get to the point where the risk is going to be as small as possible. And the reason for that is because if it goes beyond those levels, you're wrong, and then you kick the dog and move on to the next trade.
Okay, so the bottom line is you basically are looking at the dailies to give you your fib numbers and support
Sure.
and resistance, and then once you get to those levels, then you start drilling down to the 30-minute, and then saying, okay, I'm set up, and then you go down maybe to the 5-minute to actually pull the trigger.
Mm-hmm. I particularly like 4-hour charts, and the reason why is you get to see almost a whole month in 4-hour charts. In other words, each bar is 4 hours. So that gives me a chance to, to get to look, instead of looking at a daily, I can look at a 4-hour chart and see exactly the same thing. So I'm just, basically trying to find the patterns that I use, and they're everywhere. The question is, you've got to find the ones that you want to trade for that day. And, some days you'll be right, some days you'll be wrong, but overall, the probabilities to be on your side.
Exactly. Yeah. I appreciate your time. I never miss your show. I think you're one of the best. You and Basil, and everybody's great, but you and Basil are the two shows I never miss.
Well, listen, I'm sure Basil will appreciate it, because I never miss his show either.
Okay.
Yeah,
Listen, Larry, you have a good weekend.
You bet. Basil's a standard to which we're held. Okay, thank you for calling in, Gator.
Have a nice day.
You bet. And I've actually been to Franklin, North Carolina once, because I went down to visit John Hill many times, and we happened to take a trip to Franklin once. Okay, now the stock market is still a little strong today. Folks, I still believe that we are in the topping process here. It might take as long as this is Friday, and chances of the market, hey, how can you say the market can't reverse? Any market that can go up and down 350 points can do it again. So it's like Thomas Jefferson, any country, any government that can give you everything you want has the ability to take that away from you. So the market can do the same thing. So Just remember that. 877-927-6648.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, we're going to take a look now at the crude oil that we talked about with our friend from Franklin, North Carolina. And basically what I'm looking at here is you'll see the blue line up there, which is the 61% retracement of that previous swing high. That comes in at that 39.57 level. You can also see some smaller patterns, but since February the 10th, when we made the double bottom, and here again we did exactly the same thing here in crude oil that we did in the euro yesterday, and that is the fact that we took out the previous low in January by just a little bit, and then what we did is we rallied from 26 to 30 to 39, so that's $13 per barrel, and that's the same amount of rally that we had when we had the last 3-month rally from August, September, October. It rallied $13 a barrel. So keep an eye on that of what we're looking at. You have a pretty good idea of this is what we're looking at, and this is basically explains the process that I was talking with our friend from Franklin And that was the fact that we were looking at, a 4-hour chart. You can go down to a half-hour chart and blow it up and see it a little bit differently. You're still going to come up with this number of 39.50 in the April crude. Now, if you're trading June, that's already trading above $40 a barrel, so you don't have to worry about that. So keep an eye on that, and you'll get a better idea of what we're watching. So we're going to be pretty hard with Dow's up 170 today, and we got the S&P up 19, the NASDAQ's up 50, so we're rocking and rolling again. Whether we close this strong or not, we'll have to wait and see, because it's a Friday and an up week. It's pretty hard for the market to sell off Friday and an up week, particularly since the fact that we had that big down move and were able to come back and take out those highs overnight. That's telling you that we're probably heading towards that 2030 level, in 2025 to 2030 level in the S&P. That'll be the 78% retracement. But over the weekend, we'll be able to upgrade all this and see what's happening. So live every day in an attitude of gratitude, and may God bless.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.